First, it would be really nice to actually talk about the attractiveness of working for a fintech startup because, as I said, we're on the doorstep of London's financial heart. The salaries are really good. Damien, why should someone actually leave that really cushy job at a bank and join a company like yours?
I think working in a fintech company has its pros and cons, and I think that anybody who says otherwise is sort of shirking from reality. The fundamental excitement about working in a fintech company is that you get to do things quickly and you get to have ownership. And I think ownership is really powerful for anybody in their career. However, it's messy, right? It's difficult when you have 101 things to do and 2 people to do them. And you have to make a lot of sacrifices, and you have to be able to choose on a constant basis between 2 really good options. And that takes a toll. It can be demoralizing, but ultimately I think everybody who works in fintech is passionate about it because they get to see their dreams actualized. And that's really important. It's really important to see something from inception, from ideation, into productization, into distribution. And you get to be able to jump around the organization and really get your hands dirty in those problems. If you like order, then you probably shouldn't work in a startup. If you like disorder and you like to create order through disorder, then you should, because it's not going to, it's not going to be like working in Google. It's not going to be like working at a bank. There are tons of problems that you have to face on a daily basis. But I, for one, love to get in front of meaty problems and solve them. And I think that's what, if you're like that, then it's really right for you.
Yeah, I mean, I think that working in fintech right now is probably one of the most exciting spaces that you can work in when you think about what's going on in the kind of tech scene. I mean, I think we're seeing the beginning of like the unbundling of banks. So you're going to move from a world where we have these universal banks that have every product, they try and do every product badly, and you're seeing like real innovation coming from startups and companies that are scaling, which are taking the internet and really focusing in on like one problem and putting the customer first, which is like a real change in financial services. Usually big banks and big financial institutions put their risk centers first, or put their internal objectives first. And I think what all of us are doing, if it's from transferring money or payments or data or small business lending or consumer lending, is actually saying, hey, for the first time, let's listen to what our customers want and let's design a product that makes them really, really happy. So I think like that's like a really big mindset. I came from a large financial institution before I started, and actually, actually taking time to understand what the customer wants, measure it, things like Net Promoter Scores, actually thinking about what the customer, what drives them is really, really refreshing. I agree completely with Damien. I mean, of course, there's some transferable skills that you bring from, if you work in finance, or you're a data scientist, or you're an engineer. If you're working in finance, you can definitely bring a lot of what you've built up, your expertise. But I think that your mindset has to really change. One of the important things we try and screen for when we're hiring people is adaptability. So people who are willing for their role to change on a kind of 3-monthly, 6-monthly basis, because the role just constantly evolves and the only thing that's constant is change. We also look for people who are very good at like self-learning and motivate themselves to improve themselves, because in a big company you have like training and induction, and you've got whole departments who try and figure out how you can improve in your job. And I think in a startup, you have to, when you come across a problem, you've got to kind of figure it out yourself, or talk to your peers, or go to events, or pick up a textbook, or do some extra work on the weekend to actually think about how we solve that. And I think the people who really excel have that in their DNA. They might have done part-time courses, or they want to always learn. So that's kind of really important. And if you're like that, if you kind of are a self-starter and like to learn and solve things, then making that transition from a big corporate to a startup might be the right thing for you.
It's really interesting that both of you have talked about mindset, and we've all said that there are a lot of people coming from other industries, the financial sector, into these kind of startups. Hinoki, what advice would you give to the people in this room in managing that transition and making themselves more ready for a startup?
Yeah, so I think a lot of the points that Damien and Anil raised are really great ones, and they're pretty, that you can kind of generalize them to startups, like not just fintech ones, right? And so, the points around being ready to deal with ambiguity, and that being something you really need to be relishing rather than fearing is an important point. I think that also, from a learning perspective, you need to be much more self-starting, but you also have a lot more opportunity for growth. And a lot of the guys on our team, they've got roles now where you'd never get that role if you try to hire, go for that at a later stage. But because you were almost like grandfathered in, you get an opportunity to take on responsibilities you wouldn't. So I think that being a self-starter is really important. One thing I just wanted to touch on though was that a lot of the points that we talked about I think are quite general to startups, but there's a couple of things about working in fintech which I think are really important and great, which are different from startups. And that's that in fintech compared to other startups, you can really work in an industry where you're working at the heart of the companies that you're serving. So you're dealing with money and financial information, and that's generally speaking what makes businesses tick, or consumers tick. And whether it's the headphone company that's being able to pay their suppliers earlier and ship extra goods, or whether it's the guys using due diligence to find new prospects, or a company that was able to collect payments for the first time in a different way. These are things which really get to the heart of people's businesses and the way they operate. And I think that for me is one of the most satisfying things about what we do, is that you really get to have a real impact on what people are working on and what they're doing in their lives. So I think that's a great thing about fintech. I kind of realise I've gone off topic on your question there, but yeah.
No, but to vibe off of that, I couldn't agree more. I think that we have an opportunity to change the way that value is transported around the world. And what is fintech? Fintech is about the transportation of value, or between two parties. And there couldn't be something more exciting than doing that, because it's so fundamental to every single business. It's so fundamental to every single human being. And it's been broken for quite a while. And there are new technologies that are starting to emerge. And getting back to the heart of what your question was, why work in fintech, especially now? It's because now's the beginning, right? We're at our earliest stage. If you look at the majority of the businesses that are in fintech right now, they're, as Anil said, they're chopping off bits and pieces of the profit centers of the banks. They're taking either remittance, they're taking payments, whatever it may be. But you'll be part of something during the really wide-scale change, the dramatic change. And that to me is really exciting. It takes a few generations of being fintech to really have dramatic change. And I think we're just at the beginning. Look at the kinds of businesses that we've built out.
Retail, Amazon, eBay, they started nearly 20 years ago now. So online retail has been something that's kind of maturing, right? Same can be said about other companies in sort of consumer spaces such as social media or like online food takeaway, and they're all competing, they're all fighting each other out now because like the sector is maturing. Whereas fintech is really, I like to say that we're just like 1% of the journey as like actually started in fintech, and it's a huge opportunity right now to get into that and see something that's going to change in your lifetime completely. So that's really, I agree completely.
Now we've been very positive so far, but I think I want to maybe cover one of the more difficult topics. Now looking across this room right now, I'm noticing there's something that's not very balanced, and this panel as well, I'm afraid. I apologise. It's not enough women, and it's a topical issue this week in the news as well, with pay equality. And I'm really curious to know, is fintech going to be any better than the financial services when it comes to getting more women in senior roles? Who wants to take that?
Sorry, I'll take the bullet. Let me first qualify by saying that Eileen Burbidge is in charge of fintech in the UK, is on our board, so maybe that gives me a little credit. I think it is a real big problem. I think it's a systemic problem, and there's not a right answer. There are far too few women in senior positions in fintech companies. There are far too few women in tech in general. There are far too few women engineers or female data scientists. And it's tough, right? It's part of tech. It's ingrained in tech. And there's no right answer. As a business, we really try and hire as many women in the business as possible. We try and provide proper career paths. But I don't know if I have a great answer, because it starts from education, and it starts from making it cool and having success stories with great female entrepreneurs who've been phenomenal in every part of whatever kind of tech. I was over at Dublin Web Summit, and I was really impressed because Patty and David and their team really have made it an issue to get as many women in tech as possible. So they're giving out 10,000 tickets to their events. So any female entrepreneur to come to Dublin Web Summit, to interact, and it's things like that which start, it's a very small gesture and a very big problem, but it is a step in the right direction.
Yeah, I mean, look, I don't have any solutions for it, unfortunately, apart from the fact that it's a little bit of a self-fulfilling prophecy in the sense that, if you don't have women in the office, then when people come to the office, they're a little bit scared because there's no other women there. So, we really have to kind of nail it sooner rather than later so that it doesn't start to be like path dependent and people think that fintech's not for women.
Do you think that the startups, I mean, if I talk about startups in general, I get the sense that maybe startups, generally speaking, have better policies towards things like maternity care and allowing people to have flexible working. Do you think that maybe fintech could be better than finance?
I don't know actually what the numbers in finance are, so I'd just be kind of plucking things out of thin air, but I think there's stuff we can do that encourages women to apply and get involved in fintech, but there's two things that make it tough, right? One is that if you just look at the applicants that we get, it's just far more skewed towards males. And so, as an example, engineering, we've interviewed probably close to 1,000 engineers in the time that we've been running Go Cardless, and we've hired, maybe 20 or 30 of them over the course of running the company. And in that whole time, we've had less than 5 women apply to be an engineer at Go Cardless. So we managed to hire our first female engineer very recently, But that was really hard. And when they're not applying, there's only so much you can do. So I think it's not just something that can be changed at a company level. It's something that needs to be addressed at a wider industry level, and almost at a cultural level as well.
Would you all say that the door is very much open?
Yeah, absolutely.
It's very much open, but I do think that if you have a company of all men, it naturally becomes more misogynistic than if you have a company where you have diversity, and you really have to fight hard because there isn't that applicant pool to prevent that. And I think that it's not an easy problem.
Okay, let's talk.
I feel like we didn't answer those questions very well.
No,
sorry guys.
I think from.
Sorry.
I think, from my perspective, it's not a unique problem to fintech, but I think it's kind of interesting. I think if fintech can kind of take the lead versus the financial sector, which has been working at this hard, but maybe hasn't solved all the problems. But let's talk again about this kind of transition from moving from the big corporates into the smaller startups. Training, that kind of structure that people are used to. A lot of you mentioned that this idea that people would have to be very agile and get used to things changing. At the kind of sizes that your businesses are at now, can people expect structured training and development as well?
I think there's an amount of that we can do, but generally speaking, the problem isn't on the training side. It's more on the being able to deal with change all of the time, right? It's like your people's roles and the requirements change on a monthly, weekly, sometimes even daily basis, and that's one of the things. The other thing is that typically speaking, the number of people you have to do any kind of job is much lower in a startup than you have in a bigger company, right? So, you might be used to working in a team of 5, 6, 7 people, maybe even 15 people to get something done, whereas you'll join a startup and you're expected to do it all on your own, right? So there's an element of mucking in that people need to get used to as well, and I think that's quite a big shift from people that are at bigger companies that we see.
Yeah, absolutely. On the training side, as we get bigger, we are trying to put a little bit more structure into place. That doesn't mean that we have a kind of department that's focusing on it. We try and free up budget so that people can choose what, if you're a developer and engineer, you want to go to a conference, there's budget available. Each team has some training budget to do stuff together, or go to certain events, or do certain courses. So that's really about fostering a culture of, hey, I feel that I'm weak on this point, so why don't we invest in some training. We also encourage peer learning, so that's really important for us, is that different teams can do what we call them lunch and learns. So different teams present stuff to other teams, and we try and we might read a paper, or we might read a book and discuss it together. So that's quite important as well. And we also encourage our team members to go to things like this, right? To do stuff in the evenings, in the mornings, find a mentor outside the company as well. So learning from a different industry, and meeting up with them for a lunch or a dinner every month or so. I think that's also quite important. That's kind of a way that I like to learn, is through peers and talking to people like Damon and Hiroki, and so that we can actually learn from each other.
And do you guys recommend any particular books, or what would be a good way of someone kind of easing the transition into startup life?
Jump in. Generally speaking, it's much easier to jump in, to try it out, to get your hands dirty, to see, and to get involved. It's silly trying to prepare for something. Either you're cut out for it or you're not. But one of the great things about a time right now is you have businesses that are trying to grow up, such as ourselves. And then you have a lot of need in those businesses to bring in people who've seen scale or who've led larger teams or what have you, who've either experienced or have expertise in scale. And that really is awesome because you can learn from one another. So as a startup, you can learn from people that have experienced that scale, and from those people that have been in that scale can learn from the startup. I didn't want to scare everybody off on my first comment. It's so much fun, but you have to be aware of that it's going to, the people that we bring in from large businesses initially have a shock for the first few weeks.
Yeah, I mean, I think that if you want it prepared, talking to people and spending time with people who are working at startups can help. It's a bit theoretical, but I think maybe when I think about when I started it, the company, I was 26 years old and I made a bunch of mistakes and was kind of a bit unprepared for the intensity of it. And maybe had I spoken to more entrepreneurs and spent more time with entrepreneurs, that would have been, I mean, it was a different scene back then, there are not that many companies around, but I think you can get a little bit of a flavour for it.
Yeah, well, I have to agree with Damien that I think it doesn't matter how many people you've spoken to about starting a business, people can tell you what it's like, but it's not the same as experiencing it firsthand, and I think it's the same with working in a startup as well, right? Actually just going and working one is the only way to really prepare.
Where have the backgrounds of most of your hires come from? Have they come from finance backgrounds or outside?
No, none from finance. We've hired not a single person from finance.
Can I ask why? Why no finance?
Actually, that's a lie. We hired one person from finance who heads up our finance department. Maybe because we don't. So I mean, one thing that I talk a lot about when I'm asked about fintech is that, why did you start a fintech company? And none of us thought of it as fintech when we were first starting, right? We were just solving a problem that we saw, and it just so happened to be financial services. And so the way that we think about, or at least GoCardless, the way we think about our business is not really in financial terms. It's more in terms of how do we make a great product and how do we make our users happy. And when you think about it like that, then there's actually a limited amount of benefit of having people from finance involved in it.
Yeah, it's really tough, right? Because we do have some people from finance, but we've also hired some people from finance that have failed miserably. And we look more around kind of, have they just seen one environment for X amount of years and they've never done anything else, and that's kind of a big red flag because they're not adaptable. I mean, we have people from a wide range of industries. So tech businesses, finance is a minority of people, but we have hired some people from that. But even industries like fashion, and we have people who are coming from completely different industries. So I would say that the great thing about fintech is that if you're a data scientist working in a tech company, it could be interesting for you. If you're an engineer working for Google, it could be interesting for you. If you're have worked in finance, you can also apply. So there's lots of different challenges within the business. So it's pretty exciting.
So we've hired a few people from finance. The majority of, I don't think that you can really class the majority of the people who work at Doodle. We've hired people, so we hired recently the head of counterparty risk from Morgan Stanley. We hired the financial director from Huddle. We hired several people in sales from finance. But we're really trying to find people rather than CVs, and that's quite tough. One thing that I wanted to sort of veer the conversation into that I think is really important. One of the things that's so exciting about working in fintech startup, especially a venture-backed business, which all of us are, is that we have alignment. People in their careers really want to do something dramatic, and our investors want us to do something dramatic. And so we can take those chances. And people don't often understand, they feel misalignment in the business. They feel like their ideas get, rejected all the time, or things happen and the lack of alignment in business, you feel it, but you don't necessarily identify it. And I think, especially with a fintech startup, because we're sort of on this, novelty edge of tech, is where our investors really want us to take bold decisions. And that's pretty cool, because although none of us want to fail, we're not too big to fail, right? We're trying to get rid of the people that are too big to fail. And I think that's, if I was to sum up one thing, that's sort of the essence.
I think it's really interesting throughout this evening, all three of you have talked about how when you started out there were not many people like you, and now there's this thing called fintech, there's a cluster, there's other companies. Now, what I've seen many times over the years I've been covering tech, and I'm actually one of these people myself, is that you work for a startup and then you leave and you start your own startup. Is that something you guys are comfortable with? You're happy to take people in and nurture that kind of journey?
Yeah, absolutely. I think that it's something we actually look for in a lot of the people that we hire is, do we think that this is someone that's going to go and start a business themselves? And actually, like from our perspective, our job is to make the experience Go Cardless or Market Invoice or Judo or wherever it is so great that you don't want to leave, right? Like my strong bias is towards leading with a carrot rather than a stick. And so when people do decide, okay, actually this is the right time for me to leave, then you want to support that as much as possible, and we always try and be helpful. We've had a couple of instances of this, and definitely it's something that we try and encourage.
Yeah, so from memory, I think 3 people have left Market Invoice to start their own companies, we're really since so far, and I think there's going to be more, and we're really excited about that because we feel that's a good thing for London's tech scene and the community, and I think if people feel that they've learned enough having gone on our journey to start their own companies, that's really exciting, and we definitely get very excited about that. But I was reading this morning that it's kind of starting your own company is really risky, right? You're probably, I think someone's done a study in the States, I think it was Y Combinator did a study, that you're probably going to make more money joining a business that's up and running and scaling, right? In terms of in terms of like the risk-adjusted expectation of. But of course, starting your own business is an experience, and some people really want that. But I would say that I don't think everyone at Market Invoice wants. Not everyone's dream is to start their own company. Some people are really want to go deep into a field or a sector, or they want to be part of. They really identify with our mission and want to rise up the company, and as we scale, get more and more responsibility. We also try and promote, and I was talking to Damien about this as well, it's like this internal entrepreneurs track, like within the company. So if anyone has an idea that they think can really step change our business, they can come pitch it to me, and we've actually got a guy who started just recently pretty much running his own project from within Market Invoice, and that's pretty exciting because that sends a strong message to the team that we want to keep entrepreneurial people.
Bits of advice that I ever received before I started my company was that I'm the only one who can't quit, right? And
that's really good advice.
And when Hiroki was just mentioning that thing about trying to hire entrepreneurs, it really resonates with me, because the people who you want to hire have that resilience. Because you have, as a CEO or as a founder, you have to have resilience. Running a company is an emotional fucking roller coaster, and it's so thrilling and it's so rewarding. But you have to understand that there's so many times when it's just absolutely demoralizing, and you go home, you have to wipe it off, take a shower, and then come back the next day. And you look for that in employees, because those are the people who are really going to make your business solid. You want to enable that, and you want to have the stories to tell of people, you know, exiting your business and doing phenomenally well, because that's a reason for new people to come in and give your business some of their good years. Those are the people that are going to be transformative.
Yeah, I 100% agree with that. I think that one of the really important points about people wanting to start businesses is that a lot of people say, okay, I want to start a business, but that question isn't just about whether that person wants to start a business, it's also a question of timing, right? And I think that one of the great things about working in a startup, and whether it's fintech or non-fintech, is that you get to actually get some of the experiences of starting a business, but almost like watching from the outside, right? Because even though you're an employee and part of the company, you don't have to go through quite the same level of like emotional roller coaster. And so I think it's a good preparation for figuring out when is the right time for me to start a business, because I think that's actually a question that people don't ask themselves enough, and it's really important that when you do go and start something, that you're really ready for it, because once you're in, like Damien said, you can't quit. So.
Let's break for some questions. I know there's going to be a lot of questions in the room. Have we got a mic, Noel?
No.
Okay, shout very loud. Do let us know if you're happy to let us know which company you're from, otherwise we'll try and pass one through. Any questions from the room? Absolutely anything. We've got one right at the front. I'm going to pass you my mic and then...
Oh, I thought you had a question. Okay, so I'm Bridget Small. I actually coach people through transitioning their careers. So I work with people who are unhappy doing what they're doing, usually very talented people, and some of the guys that you're perhaps looking to hire. And I've also been one of those people, and then I've also worked in small companies and that sort of thing. So I was interested about what you were talking about, the types of people that succeed and don't succeed within your organisation. So you talked about adaptability and resilience as being desirable traits, and I wonder if you might sort of talk about the favourite qualities, so your best hire, what is the single quality within them which you most appreciated, and then perhaps your worst hire, probably without naming them, but to say what it was about that hire which didn't work.
To me, or?
If it's sort of one word thing from everyone would be amazing. Yeah.
One word. Oh God.
Good question. So I actually think the most important point is attitude. It's rare that we've regretted a hire because they weren't capable. And actually, whilst being like really good at what you do is really important, the things that make the best people stand out is attitude. And by that I mean, you know, how do you deal with things not going your way? How do you deal with conflict? How do you deal with, you know, the fact that in a startup it's not always up. There's a lot of downs as well, and you know it's a bit of a roller coaster. And the people that I've regretted hiring have always been because they haven't been, you know, a team player, or they haven't had the right attitude. And the guys that I'm really, and girls, sorry, I say guys to me, but that I'm really proud of and glad that we hired, it's always about attitude too.
In terms of the worst, so we have some like red flags which we try and spot during our interviewing process, and so some of those are people who are like disruptive or lack like a self-reflection or honesty. Because what we really like is people who, everyone's going to make mistakes, right? So being honest about where you're weak, where you're strong, really helps people, and also giving like, you know, open and honest feedback on everything. So we try and do these retrospectives where things go wrong and actually not blame, but actually say, you know, this is where the problem was. So I think people who can also kind of take a step back and move out of the kind of, it's not my fault, it's your fault, and think about it more holistically, have been successful. And people who can't do that, and who bear personal grudges and who get, you know, have not ended up working very well. So that's been important. But my favorite example is we had a guy, this is a bit more funny, we were moving around desks and there was one recent hire who just come in who refused to move his desk for like health and safety. And when I heard about that, I thought it was like a joke, but actually he refused to move his desk because there was like no policy around if he injured himself. That was a bit of a bad hire.
How long did they last? About another week.
I think resilience is actually an excellent word. There was a Harvard, and this sounds really bad, but there was a Harvard Business Review study about resilience, and it looked at sort of the extremes of resilience, right? And the study focused on Auschwitz. Now, like working in a startup's not like Auschwitz, but if you want to understand resilience, you have to understand, where are places that which really are so dramatic that they create such resilience. The people who survived in Auschwitz had a lot of resilience, right? They weren't the optimists. They weren't the people who said, "Oh, it's going to be." It's going to be, we're going to get out in Christmas, we're going to get out in Easter, we're going to get out whenever, in Hanukkah, probably. Awkward. My last name's Kimmelman, so I can make a joke like that. But there were people who were very realistic, who had a true sense of understanding of what the reality was. They weren't optimistic, they weren't pessimistic, they were realists. That's one. They had a creativity, right? They were able to overcome things. And they had a love for life, which is very important. The love for life was their ability to say, you know what, I'm going to take on a problem, and I'm going to own that problem. And so one of the survivors that they interviewed was a guy who was a psychiatrist, and he said, "I'm going to write a book about the psychology of prison camps," and that was his mission, that was his goal. And I think, and they related that to all businesses, good and bad. The best people in the worst businesses and the best people in the best businesses have resilience. They are realists. They don't, they don't say, "Oh, we're going to nail the projections." They have they have a realistic understanding of where they're going to get to. They are creative. They get around obstacles. Ben Horowitz says, being in a startup is like a 3D game of chess. There is always another move, right? There is always another move. And they have a love of life, right? Just because it might be shitty one day, it's going to be all right. There's and I think resilience is, for that one word, I gave you one word, you asked for one word, I gave it to you, resilience.
Have we got any more questions? We've got a question over on that side. Maybe we can pass the mic down. That'd be amazing.
Hi, I'm Alex. I work at Missive, which is a relatively new PR and communications agency specialising in fintech and telecoms. And I was asked a question before about the future of fintech in the next 5-10 years, the longevity of it, if there's a bubble. What will happen there. I just wanted to get your guys' opinion on that. Can it keep growing essentially at the level that it has been over the past 5 years particularly?
I think it's definitely going to grow. It's going to grow faster over the next 5 years, I think, because firstly, I don't think there's a bubble in it. Like the companies being built here have got really, really simple, proven business models, and there's a very clear path to profitability for a lot of these businesses. And actually, these markets are incredibly large, even though we're all taking quite specific niche areas of finance. When you look at it, especially on a global level, these markets are absolutely ginormous. So I think there's a lot of markets that are being attacked, but it's still you take any one of our companies or any of the other fintech companies you hear about, you look at their revenues or their percentage of the market, and it's tiny, right? So I think that as more and more consumers and businesses become happier to adopt new kind of providers for financial services, it's going to just accelerate the path towards fintech being a big part of the market.
Yeah, I mean, I agree. I would agree. It's dangerous to kind of maybe say like take one or two companies that you believe to be overvalued and then say like there's a bubble. Like of course there's always at any given point in time there's going to be companies that are overvalued and undervalued. But you know, when I look at what we're doing, and it's the same with everyone else in fintech, is when I look at the size of the business, the growth potential, and the profitability of how it can end up. When we start to focus on profitability, it's really exciting, right? So there's a lot of banks are making a lot of profit with products that are not very good. So there's a lot of things that we can do to capture that. And the sheer size of financial services is like mind blowing, right? Like we operate in the UK alone, and there's probably about 15 billion outstanding in some sort of invoice finance, factoring, cash flow finance, and that's like a conservative estimate. You know, we did 36 million last month out of a total of 15 billion that we could do. So it's huge, right? So I don't think it's overvalued. I think we're just getting started, as we've said, and there's a long way to go.
We should get a conversation that we don't agree with.
Yeah.
So yeah, I agree with both Roki. And I really think that it's another tough question actually, because you're painting a picture of the market with very broad brushstrokes. So there are a lot of businesses that are going to be overvalued, and businesses that are great businesses are not going to be having a tough time to raise capital. The reality is that from one side you have the crash or you know the deflation in the Chinese markets that's really hit home to a lot of these large pension funds and hedge funds, and so they're saying to the venture firms, you know, tighten your ropes, tighten your strings. On another side, you have a total disarray with funding. So you have all sorts of new players entering the markets. You have individuals that can write private equity-sized checks. The reality is that there are businesses like Apple, like Facebook, that are very conservatively priced on the public markets. I'm not going to be able to explain all of the intricacies or all of the nuances with the funding market, but one thing is really true. If you're building a business for substance, whether you're in a bubble or whether you're not, you're going to get funding. And one last thing, if you look at the disruptions of decade, they were really in social, they were really in communications. But if you look at the disruptions now, they really hit home to the fabric of society. They're in transportation, they're in financial technology, they're in biotech, they're in food tech. These are things that are really, they're a fabric. And that's both a good thing and a bad thing. But it's certainly disruptive, and it's certainly, there's a lot of room. And fintech is probably up there at the top in terms of size of opportunity.
Let's get down to last questions. Let's get the lady at the back there, if we can get a mic in that direction. Behind the glass.
Lady?
There we go.
Hi, I'm Stephanie. I think what I'm gathering and what I know is that fintech in London is really a big differentiator with with other technologies, other things coming out of the US, for example, but are you worried about fintech competitors coming out of the US, New York, and the fact that maybe they're more easily able to raise funds? How are you finding the competition from the US?
So I think Europe's on the up and up, and I like to root for the underdog. If you look at the number of billion-dollar businesses that have come out of Europe, and the amount of money spent on building those billion-dollar businesses versus the amount of money poured into American companies and the number of billion-dollar businesses that have come out of America, it's actually quite dramatic. If you go to Atomico's website, you can see all the stats on this. London in particular for fintech, and I'm not going to talk about the rest of tech, we have the serendipity of all of the financial markets right at our doorstep. Unlike New York, there's a saying that New York has the fin and San Francisco has the tech, but neither have the fintech. That's not my saying. But you have a real, you have policy, you have the serendipity, and you have GMT. You're in between every single market. And that creates a really perfect storm for fintech in London.
Yeah, so I think as an entrepreneur, it's always good to be a little bit paranoid about competition. Not too paranoid, but sort of healthy level. People often ask me, "Oh, are you afraid of like the banks competing with you, or the banks innovating?" And I would actually say I'm probably more paranoid about like the big technology companies moving into finance, because I think they're much better placed and their DNA is such that they could do a much better job than the banks. I think it's almost kind of too late for the banks to change their culture and their DNA. But having said that, we're only just getting started. America, the US is a huge, huge market. There's an opportunity for both US and European like titans to form. So I don't think it's a question of like one Silicon Valley company taking over like the whole space, given the size, and there are like local like different shades of complexity depending on what you do, right? So for what we're doing, there's a different regulatory environment in each country, or even potentially in each state in the US. So it's not just like a one platform can sweep across the whole world seamlessly in the same way that maybe Facebook could sweep their network across the whole world.
Yeah, I mean, I won't dwell on this too long because I think that Damien and Anna will cover most of the points. But I think there's a couple of things that really give London a bit of an edge compared to the US when it comes to fintech. And that's why you're seeing, actually, if you were to look at the balance, I'd say Europe is probably more advanced in kind of fintech than the US is. And those two things are, one, the point that Damien mentioned around proximity. Like, I was kind of, being a bit facetious and saying, yeah, we don't hire for finance at all, but like the benefit of having finance so close to tech is that, the reason we all coincidentally started fintech companies is because we all saw problems in finance because we all worked in finance, right? And so I think there's a lot more cross-pollination now. And then secondly, actually, if you look at it, the UK is a much smaller market than the US. And I think that one of the big sort of drivers of value in terms of fintech is going to be about driving global adoption, right? And in the US, we can just get away with being based in the US for much, much longer, whereas all of us are having to think about globalization much earlier. So I think that there will be a sort of a shift towards dealing with global regulation, dealing with global banking systems that will be a real sort of cutting edge in terms of experience over here compared to the US.
Got a question there.
Two things you didn't mention there, I think, are the fact the way the government has really promoted through EIS and through various schemes, through the ability to start up here, and that's really fantastic. The fact that I think Britain or UK or whatever has led the way in regulation, especially in countries. I think Europe and America are following us. They really hurts me to say it, but the FCA have done a brilliant job, I think, in putting regulation in place which we can actually start to follow, which I think other countries struggle with.
Yeah, I think they're two really good points. I agree.
Have we got time for one more question? No?
Last one.
Last one. Have we got any more questions? Let's see. Wave your hands if you.
I've got.
Oh, we've got. Yes, sorry.
Hi, my name is Diana. I'm a full-time MBA student. Just following what you were saying, I just have a question. You cannot access, most of the fintech companies don't access directly to the Bank of England. They have to go through banks. So do you think that they are going to feel threatened at some point, that they are going to threat your business? You know, because you have to hold the accounts through the intermediaries of the banks.
I mean, this is one of the areas where regulations are actually being really helpful, right? Because a lot of the regulation that's being put in place right now and being thought about is to really avoid exactly this, because I think one of the risks is obviously the banks say, okay, do you know what, we're just going to cut you all off. And I think it's going to be quite difficult for the banks to do that from a sort of both a publicity and a regulatory perspective. I think actually this leads to a sort of even more interesting question, which is what is the role of banks in the longer term? Because I don't think banks are going to disappear, right? Not in the near-term future. And that's where I see the opportunity for a lot of the banks, is that so long as they're owning the current account and the store of value for the vast majority of the population, then actually they're in a great position to be running the rails. And actually, I think that the banks that open up the most and encourage people to build on top of those rails are the ones that are going to be most successful in the longer term.
Yeah, actually the push from the EU and the government and the British government is to force banks to share their data. So there is like this directive that's supposed to be coming out, which we hope will come out in 2017 or so, which will basically force banks to open up the current account information. So at the moment they have this kind of walled-like system whereby if a company applies to us to raise funding, they need to just download their bank statements in a file and upload them, or we need to think about, we have to use this other technology like screen scraping technology, because there's no way of porting like their current account information into our system, which is a really important component of understanding the riskiness of the borrower. So that's that's going to help fintech, right? That's and to touch on what the other gentleman said, which was actually the government wants to wean itself off a dependency on like 4 or 5 banks, because in the last credit crunch you had these too big to fail institutions which had to be bailed out with taxpayers' money, and it was a complete and utter failure. And in the subsequent years they wanted them to lend more to businesses, and they just realized that no matter how much pressure they put on them, they can't deliver it because they haven't got the products, they haven't got the innovation, they haven't got the expertise to do that. So I would actually hope, my hope is that in the future, peer-to-peer funding platforms might be able to access funding through the Bank of England directly, or through like funding for lending, because funding for lending is not being devised just to work through banks. It should work through any mechanism that gets it to small businesses, and that's really exciting for us, because then we're going to completely win, because the banks have this huge cost overhead and we're going to get the same cost of funding as they do, and they might cease to exist.
Unfortunately, we're running out of time, but I think it would be fabulous if we could maybe ask each of our panelists just in 30 seconds to tell us any particular types of roles they're looking for right now. I'm going to hand it straight over to David. Who are you looking for?
I think we have about 30 different roles out. I see Claire in recruitment, like nodding her head. So we're looking for a lot of sales guys, field sales, lead qualification. We also have a lot of data science roles out, a lot of PHP developers, a lot of infrastructure guys. Honestly, if you are looking for a job, please come to us, because we're very opportunistic in terms of hiring. Is that 30 seconds?
That's perfect, thank you.
Was that enough there? 1 second.
I look forward to battling it out for all the top talent here. But We also have a bunch of roles open, especially in engineering and development. So if you're a developer, data science, and we also have a lot of marketing roles up. We're building out our marketing team, so if you're in marketing, and also in sales, in partnerships as well. So we do a lot of work where we do schemes with accountants and venture capital funds, and even trying to work with some banks in terms of doing partnerships. So anyone who's interested in that, that's also an interesting part of our development.
Yeah, same answer.
Thank you so much for being a fantastic panel. Can I just ask you guys one question? Who here knows what the blockchain is and how it actually works and honestly understands it? The blockchain. Not that many of you. How many of you want to know about the blockchain and understand it? Few. I'm going to do a shameless plug for the memo. Tomorrow morning, look out for it. We have done a crazy video with Reuters. We are going to explain the blockchain using Victoria sponges. Please have a look at it. It's taken about a month to make it, involved about 5 different cakes, but hopefully if some of you can understand the blockchain, I finally now do understand it. That will be a really good thing, so check it out. I want to say a huge thank you to our panelists who've been fantastic, and thank you to your audience. They're going to be here for a few minutes, aren't they? Thank you so much for listening.